Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
It's going good. There's some bumpy things going on in the crypto market, but as far as Hedera goes, we had some great news come out this week, so we wanted to get into it. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So we'll start off with some of the negative stuff going on in the crypto sphere, and that's in the regulatory space. And what happened essentially this week was both Binance, and that includes Binance US, and Coinbase had suits brought up against them by the SEC, the Security and Exchange Commission. And what these suits, both of them say that they're pretty much operating unregistered securities exchanges. There's some more things that are wrapped up in the Binance one, and then they're both also hit for some of their staking products. When it comes to Hedera and HBAR, there is a little bit of a positive lining to some of this. There's been several of these suits brought. So we've seen Bittrex come up. We've had now Binance and Coinbase. We've also saw one come out on Kraken. And in each one of those suits, there's several of these tokens or coins that are listed. And HBAR has yet to be listed in one of these. If the SEC continues this regulation through enforcement, which is pretty much where they don't write the rules out, they just kind of let the market understand what they think the rules are based off of their enforcement actions. What they're claiming is we don't need any new regulations. All the existing regulations are sufficient to regulate this space. Now, of course, there's a lot of debate around that either way. But just getting back to HBAR, most of the major exchanges in the United States that list HBAR have already had a suit brought up against them. So they haven't listed in those tokens and coins HBAR. That's certainly a positive development. Just overall, Zep, I know you're in a different jurisdiction, but what are your thoughts around regulation so far?
It can sometimes be disheartening to see the sort of the way they're going about it. I don't think there's any two ways about that. But I think beyond the US, you look towards somewhere like the UK, you look towards somewhere like Lisbon, Amsterdam, Dubai. There are lots of other places that maintain a bullish thesis on Web3 as an industry and as DLT as a fundamental technology that's going to work alongside the likes of AI and ML and all these robotics and things that we've discussed before. And so even if this sort of innovation is being stifled in the short term in the US, other countries will open it and are actively opening their arms to it. It's a positive signal for the long-term trajectory. Even if it's slowing down in the short term, the long-term trajectory remains positive. And I think when you look at somewhere like China, for instance, mainland still it's ambiguous what their real stance is. But what we did see was this week or in the last week rather, we saw them publish their Internet 3.0 white paper. Obviously, it's pretty much synonymous with Web3, that terminology. So this came out of one of the biggest fintech regions or tech regions in China on the mainland. It didn't officially come from the Chinese government, but this region is, sponsored by the government, and it's where they go for innovation. And within this white paper, they laid out their thesis for the sort of merging of the real world and the digital world through the forms of things like VR and the metaverse and Web3. So Web3 was explicitly mentioned in certain contexts throughout that white paper. And so that in itself is bullish that one of the largest economies in the world, one of the largest growing economies in the world, is also behind this narrative. And when you look to somewhere like Hong Kong, which in the last few weeks, they've now reopened retail investing in cryptocurrencies on centralized exchanges. And so this would suggest that the mainland China itself, when you compile that with the white paper 3.0, for Internet 3.0 rather, that their stance is slightly softening as well. Whilst China short-term last time stifled Bitcoin and short-term innovation, again, it looks like they're sort of backtracking. We do have other audiences, other regions that are slowly changing their stance or at least seeming more bullish in the long term. So I think, again, although the US isn't doing quite what we'd like it to do, there are other regions that remain bullish, and that's clear in multiple regions.
And I think that is going to have an influence on the US, all the other jurisdictions, how they're looking at crypto assets and so forth. But there's an old saying when it comes to the United States, they will eventually do the right thing when they've exhausted all other options. And I think that's what we're going to be looking at here. There's also the Ripple case, and it sounds like there's some really positive developments there. And if there's a positive outcome for Ripple and XRP coming out of that, that's going to have positive impacts on the rest of the crypto space, especially the altcoin space. But the most important thing I think we can do as a Hedera ecosystem is continue to build value add use cases throughout all the different verticals we talk about here every single week. And Rob talked about one in particular this week in Shark Bites. He's finally back, and he talked about TradFi a fair amount in this one. So let's listen to what he had to say. Hey, Rob, welcome back.
Hey, Brandon. It's been a while, but I'm super pleased to be back.
Yeah, we had a couple of delays there, but we'll get back into it. So before we get into Hedera, I'd like to get some highlights from your trip to Mount Everest. It looked amazing.
Yeah, well, it's still Hedera related. You know, there's everything I do kind of has a Hedera angle. Everest Base Camp is an amazing adventure. Anyone who's done it realizes that it's a bit of a commitment. Anything at altitude is a challenge, so it's not a walk in the park. But it was an incredible adventure for me and the team, and we had perfect conditions right at the end of the season, just before the monsoon start. It was we had crystal clear days. You could see all the mountains. It made you feel very small in the scheme of things, which is great to get you in the headspace that you need for thinking. And I did a lot of thinking about a lot of these things, and mostly Hedera related.
Well, some of the pictures that you sent and you tweeted were absolutely amazing. And I hear you brought some mementos back, right?
Well, I didn't. The rules are that you shouldn't take anything from the national park that is the Everest National Park. And of course, everyone likes a little bit of Everest rock as a memento, and they're not allowed to bring it back. But what I did have was my mobile phone and my Twigital app. And I Twigitized some rocks. And I found a couple of rocks that looked like shark teeth as well. So that was pretty cool. And I'll send you one so you can show everyone. But it was pretty incredible, actually. And there was me sat at Everest Base Camp, and everyone else was taking selfies and, sort of soaking up the experience. And I was sat there looking for rocks that I could Twigitize. And now I've got a collection of. There are 7 different types of rocks geologically in the Himalayas, which is pretty amazing. The Himalayas are relatively new mountains, and they were actually on the seabed at one point in time before the Asian continent sort of crashed together. And so we've got this amazing kind of range of rocks that, all different colors, and they sparkle with fossils and things. And so I was sat there at Everest Base Camp with my Twigital app, trying to get the best possible outcomes. And they came out really well. So thank you for offering that. I do a lot of trekking, and I obviously dive a lot as well. And the adventurer's mantra is, leave only footprints, take only photos. So I think we need to work together to get Twigital onto underwater cameras, and then I can really push the boundaries.
Yeah, we could probably figure it out. That's the thing with Twigital is it's just a new way to interact with these objects that we treasure. And in situations like that where you can't take it with you, this is another way to do that. And with everything that's going on with Apple, what they announced this week with Vision Pro, we knew they were leaning into this area because they really embraced these USDZ files, these 3D files that Twigital creates. They originally were created by Pixar, the animation studio, but Apple has really embraced them. You can use them on your phone for AR, but now with Vision Pro, with their headset that they have launched, it's going to be a completely different dynamic. So you sent that rock to me that we were able to take a look at, and we were able to set it in that USDZ file and manipulate it. But if you do that with a headset and you have it in front of you and you can take a look at it and zoom in on it and everything else, it's a completely different dynamic. And between Apple and Facebook, they're dumping tens of billions of dollars into this metaverse space. That's only going to continue. It's going to be 12 figures. They're not going light, just like Apple. When they make a move, they make a move big. I just watched everything that came out around that Vision Pro yesterday. I think Apple's going to create all those metaverses themselves. and they just want to sell the hardware and the software to interact with these spaces. So Twidgel's really well positioned, being able to not just create those files, but then to tokenize those files and allow you to tell those stories of those objects that you can treasure. We're in a really good spot. We can make not just Twidgel, but Hedera synonymous with that process of creating the assets and then tokenizing them. So it's going to be exciting moving forward.
And there's this crossover between the metaverse and real world, which we are now going to be able to populate our own metaverses with our real world assets. And this crossover, this blur between the two could go any direction, but Apple's intervention in this space now is going to take it to another level. I mean, I've got my daughter trying to Twidgetize our cat, which isn't going so well at the moment. On two fronts, my daughter's skills in photogrammetry are fairly limited at the moment, and the cat won't sit still. But I'm sure we'll get there, and then she can take her beloved cat into her metaverse space and sit it on her bed and whatever she wants to do, which is pretty cool, right? And it's here, it's here right now, and the ability to create NFTs from these binary files is a game changer as well, because they become true assets, true property within the metaverse and within the IRL. Again, another game changer. So super excited about that. Congratulations. Twidgetal is a great experience.
Rob, thank you so much. We really appreciate it. Of course, you're using the closed beta version. It should be available for the public before too long. But Rob, thank you so much for sharing your trip to Mount Everest. It seemed like an amazing experience. Rob, the next thing I want to get into, and I just talked to Christian Haster a couple of weeks ago, and this is one of the things that he's really excited about, is the use of Hedera in TradFi. We're seeing tokenized real estate on Hedera making headlines with both Red Swan as well as quarter tokenizing and fractionalizing a home with Toko. And we know Toko, of course, from DLA Piper, one of the Hedera governing council members. It's still fairly small scale right now, but where do you see all this going? And do you think it's going to scale in a fairly quick manner?
I think it's going to scale quicker than we expect. After the ICO boom back in 2017, everyone thought that security tokens were going to be the next big wave, and they expected it within the next year, because we're in a bull cycle. And it never materialized, and it really didn't materialize because of the lack of regulatory certainty. And clearly, we've got challenges in your neck of the woods in the US, but elsewhere in the world, this regulatory certainty is actually materializing. And in parallel with that, those security token ambitions are now materializing all over the place. And real world asset tokenization is part of that move. And Hedera is supremely well placed for this, and we're seeing this now because, as you've said, Red Swan has announced. We've got the Toko platform, which is one of our kind of first movers in the space, and providing exactly the kinds of legal framework, regulatory framework, and the ability to issue tokens of all types from that platform. Red Swan have been rebuilding their offering. They were one of the first flagship potential adopters of Hedera back in 2018. So pre-open access, we were talking about Red Swan and commercial real estate. And they took a different tack. And I understand that tack was with partners that they couldn't find the right commercial fit, because of, Ethereum gas fees and all sorts of other reasons, and have come back to Hedera because, we're ready. And the doors are open, and there are examples of other real-world asset tokenization use cases being built on Hedera. And so Red Swan have always been friends of the network, and now the time is right. And it's not just because the technology's matured. We've got the Hedera token service. We've got standards around both fungible and non-fungible tokens, which you need. We've got this EVM compatibility that is getting really rapid adoption, which can wrap these tokens if necessary and can certainly provide the orchestration of the other network services. And all of this comes together in a set of tools that the likes of Red Swan and Toko and Arcadia, the foundation announced that partnership back in September. And then you expand to what we do on Guardian. That's real world asset tokenization in terms of credits, carbon credits and other sustainability credits. You've got fresh supply doing it for supply chain. These are all aspects of the same thing, but under the covers, you've got this composable technology that can be applied to not only real world assets, but real world problems. And the benefits are pretty apparent. We've always talked, when we were talking about security token platforms back in 2017, the goal, the ambition, the dream was that blockchain would provide this transparency, the divisibility of assets, which could extend into the more retail space, assets like commercial real estate, which were previously unattainable for investors, for retail investors or even sophisticated investors, suddenly become available to them. So you can build portfolios, you can build baskets, you can hedge across multiple asset classes. It becomes a very much more, you build to your own profile investment thesis, and these platforms now can provide that. It becomes a lot more easier to manage, manage things like dividends or coupons or distributions of payments into that kind of investment space. Whereas previously you'd maybe have 3 or 4 big institutional investors. You could manage it off a spreadsheet and you could understand what that coupon would be at what point in time based on the legal agreement that had kind of formed that instrument. But if you've got thousands or even millions of investors in that, you can't do it off a spreadsheet. You need to do it with smart contracts. You need to do it in an automated and programmed way while maintaining the property right that is that asset. That can only be done on a scalable distributed ledger where you can be certain of that the investors are being correctly distributed to per the legal contracts, So all of these things point to Hedera. They all point to actually the tool set that we provide being used in these ways. And because the regulatory certainty is now becoming clearer in certain jurisdictions, the first movers in the space, the ones we've talked about, the Tokos and Red Swans and Arcadias, and all the others are getting the clarity they need to make the investments and the efforts in terms of bringing these new solutions to market. BCG, you asked about how this would scale. BCG, the consultancy, said last year that there'll be $16 trillion of assets that can be tokenized within this decade by 2030. And that's just, I believe, in that real estate space. That's by far the largest portion of the assets that they were looking at. But of course, we've got Abrdn looking to tokenize funds, and we've got, as I've talked about many times, we've got the ESG space, sustainability space, and the trillions of dollars that need to come in order to move the needle in terms of climate change and getting to net zero. So this all adds up to a very, very, very big number in a very short time frame. And there is only one network that will be able to support that.
Well, one of the things, you mentioned the regulatory gray areas in the United States. The nice thing about this is it's not a regulatory gray area. You're allowed to tokenize assets, and these are securities, and they're doing everything by the book anyway.
Yep.
So at least in this corner of what's going on in the crypto space, we don't have to worry about those regulatory gray areas. Of course, not knowing what is a security in other places is a little bit more difficult. HBAR being deemed a security would hinder the network, could hinder some other things that are being done. But in this area, there's nothing wrong with tokenizing these assets, and there's already securities. They know they're securities, so they can already work within the regulatory framework. So no big issues there. So staying within the TradFi space, Swift just came out with an announcement just this past week. Just so everybody understands, Swift is a system that powers most international money and security transfers. So what Swift announced is a new set of experiments with more than a dozen institutions to explore blockchain interoperability challenges to integrate with multiple public blockchains in a collaboration with Chainlink. Of course, we know Chainlink. That's a connection because they are one of our governing council members. And it's the institutions involved that has me bringing this up to you, because those institutions include BNP Paribas, BNY Mellon, Citi, Lloyd Bank, and ANZ Bank. And ANZ Bank, of course, did a proof of concept really recently by tokenizing and creating a stable coin of the Australian dollar, and you were involved with that. So what are your general insights specifically around the potential of Hedera being one of those public blockchains that they mentioned that they might be working with?
So I've got no alpha on this. There's no inside, and
I
I
was
probably
hoping.
wouldn't be able
I
to
was
talk.
hoping.
Yeah, okay. However, ANZ's position amongst this consortium demonstrates their ongoing desire to be at on the front edge of these sorts of initiatives. Swift is as you've said, I mean, it doesn't move money. It's a financial messaging system between banks, right? And as you say, that enables the movement of money, and in terms of the nostro vostro and banking counterparty relationships. And Swift has been looking at ways of incorporating distributed ledger technology for years. I'm an old school payments guy, and have been working with Swift for a couple of decades. And they've looked for all sorts of ways to incorporate and get the benefits of distributed ledger technology. They recognize that an international financial messaging system such as Swift needs to keep up with technology advancements. And the adoption of DLTs by many of the world's banks, including the ones that you've listed, it's just a recognition that all these banks plug into the Swift system. So if these banks are also using or plugging into distributed networks, then there has to be some kind of interoperability at the edge or incorporated. So it's a really good initiative. ANZ are always on the front foot. They like to demonstrate capability. Like you said, it wasn't a proof of concept. They actually launched their stable coin, the $8DC, on the Ethereum network, and have demonstrated a couple of transactions. They participated in the CBDC pilots here in Australia under the Reserve Bank of Australia. And they have issued the same smart contract on the Hedera network on testnet, but all of the capabilities are in place to drive Hedera issuing on these stablecoins, and we're working very closely with them on some exciting use cases where that would kind of just be a transfer. They also are part owners in AP Plus. AP Plus are a governing council member, as we know, Australian Payments Plus, that was formerly FPOS. So there are lots of interconnectivity here as well. I can't talk to the use cases, but they've stated that they aren't wedded to any particular blockchain, ANZ that is, and they see the benefits of the sustainability because they've got core values around sustainability and scale and institutional grade technologies. So just join the dots.
All right. So obviously TradFi is going to be a really hot space when it comes to Hedera. But to wrap things up today, you've made the move over to the Hashgraph Association, and I just want to see how things were going there.
It's amazing. I've been there 2 months now. Actually, it's notwithstanding the little sojourn in the Himalayas. The Swiss Hashgraph Association has been running their innovation program for 18 months. Actually, people don't often recognize how long they've been going. They've, a number of cohorts, Twitch still included, have been through that process. So the machinery is in place, and I've kind of inherited a lot of capability, a lot of strong process. So and I'm very lucky in that regard. My job is really to turn that into, or to adopt that and create an enterprise grade accelerator that enables faster adoption by enterprise that we all know take a very long time from bang to buck. And we've got, I'm in the lucky position that I've got the governing council all working or mostly working on use cases. So there's kind of we're shooting fish in a barrel there, and we're helping them to accelerate those use cases. And like I've said before, one's not good enough for me because there's always 2 or 3 or 4 good use cases that these enterprises can adopt, and then all their peers, and then there's plenty of other use cases. I've got nearly 50 projects now in my pipeline. Those will be onboarded over time, and there are various stages of readiness, but we've got some pretty big ones pretty far advanced already. Our intent really is to scale through our partnerships with systems integrators. The THA provides a program management framework and a distribution and risk management and delivery success function for these big projects. And then with our partners, the systems integrators that can provide, the shock troops in terms of consultancy up front and then delivery as well. And we kind of manage the whole thing. I've done this many times before in corporates and enterprises. So the machine, once set up, will just kind of get fed and scale according to the demand and the deal flow, which is pretty massive at the moment. So that group of partners will be the systems integrators are being trained and certified. So we're getting enterprise engineers, both internal and external, trained up so that the quality and the capacity of these partners match the demand that we bring to them. And then we get the benefits also that they bring their own corporate clients into the funnel as well. So it's a two-way benefit. So I'm very excited. It's still early days, but we're rolling, and I'm super excited about the potential over the coming months. And one more thing, shout out to Elizabeth for my latest amazing t-shirt. This is the Hashgraph Association logo. So thanks, Elizabeth. Keep them coming. And I'm hoping to be sporting it in the live event in October.
Oh, yeah, it's going to be a blast. Rob, thank you so much for swinging back, and we'll see you again next week.
Cheers, Brandon. See you next week. Bye.
All right, Zeb, there were all kinds of really good things that came out of that segment with Rob, but the one thing that really caught my ear was the 50 enterprises that he has in the pipeline for the enterprise program they have at the Swiss Hashgraph Association. What were your thoughts about that?
We knew that Rob would be a tour de force when he moved to the Hashgraph Association, and of course the HEP, the Hashgraph Enterprise Program, is looking like the early embodiment of that. We know that Rob's history is in these real industrial grade, institutional grade use cases and building this kind of infrastructure from his time at FPOS, his time in the army, and the time in banking throughout that. And so it seems that he's found his sort of perfect match over there. And to hear that 50 enterprises are building, I mean, that's fantastic. And I'm, couldn't be more bullish having Rob and the rest of the team over there behind that. So I'm sure we'll hear a lot more in the coming months.
So we actually hadn't planned. We were talking about, of course, TradFi, Hedera in TradFi in that segment, but we didn't know about what was going to come out of Abrdn. This is another promise that was made and a promise that was kept, that they were going to start to tokenize their funds this year. And we heard about 16 billion pounds worth of a fund that was tokenized using Archax. That's an exchange that they acquired. It's a fully regulated crypto exchange or digital assets exchange. So that's about $20 billion total value represented on the Hedera network. Absolutely massive.
Yeah, like you said, a massive figure. And I haven't really seen any other chain actively deploy like this. We've heard of partnerships being created. We've heard of narratives being written around TVR, around total value represented, or rather real world asset tokenization. We've seen people mention it, but this is it in action. This is the narrative being built out. And so personally, I think I'd like to see some way of these metrics being tracked in the same way that TVL is. I don't know where the industry lies with that. I don't know where Hedera lies with that currently, but it really seems like we need a way of sort of amplifying this as well as possible as an industry standard. TVL has a sort of standardization or a general sort of set of rules. I'd love to see the same thing for TVR so that we can mature as an industry with these sort of high profile institutional use cases.
Absolutely. No question about that. And I do want to get more into that conversation around TVR versus TVL. But first, let's get into a few quotes from the Abrdn and the Archax teams. So the CEO of Abrdn, talking about this tokenization of their funds, said, "Today marks further progress for Abrdn's digital asset strategy. The potential for assets to be traded via blockchain is significant, and this is another step in putting Abrdn at the forefront of this new offering." Now, Grant Rodford, he is the CEO and co-founder of Archax, that regulated exchange that we mentioned. He said, "Creating a token representation of our interest in such a traditional and institutional grade vehicle opens up all sorts of interesting opportunities in the digital asset space. We're exploring other applications with Abrdn to improve access to investment products in this space in the near future." And finally, Russell Barlow, the global head of alternatives at Abrdn, said, "The focus of our digital asset strategy is on the developing and long-term opportunity we foresee as blockchain and other DLTs come to play a central role in how markets function. Our investment in Archax is a key part of this strategy because we believe that the future of financial markets lies with leveraging new technologies such as Web3 and DLT. It's exciting to see a tangible application of Archax's tokenization engine working with Hedera, and it paves the way for us to look at creating other digital, blockchain-based token investment solutions." All right, Zeb, obviously they are excited about what they're doing, and I would like to get back to TVL and TVR. We talk about those terms a lot. Total value locked is on DeFi platforms. We're talking about just digital assets and the assets that are locked in liquidity pools on DeFi platforms. When we're talking about total value represented, we're talking about traditional assets that have been tokenized on whatever chain it may be. Hedera, we're talking about in this instance, tokenizing $20 billion worth of the Abrdn fund. We're also talking about Red Swan, and we're talking about Toko tokenizing real estate, even some of the things that Digital Commodities Exchange are doing. I would also throw in stablecoins, fully backed stablecoins into that lot as well as total value represented. And I would actually submit that total value represented is more important than total value locked, though they are both very important. It's just not tracked a lot at this point because there aren't a lot of other chains out there that have a lot of traditional assets that are secured on their network. Right now, with what Abrdn came out, I would think that Hedera is right behind Ethereum as far as total traditional assets that are represented on their network. So the one thing that I would like to see happen is all of these companies start to have an API where they have the total amount of assets that they've tokenized just up on their website that can be then tapped into and aggregated by other sources. Say we have that done on the Hedera website where we have a little box showing the total value represented of traditional assets on the Hedera chain. And then that could be pumped out to other places like CoinGecko or CoinMarketCap or DeFi Llama or things along those lines. Try to get that to be easily accessible information for the rest of the market. What do you think?
Yeah, I mean, like you said, that information needs to be easily accessible, and I think importantly, everyone has to be following the same standard of how they actually track this value. And I think personally, what I'd love to see is an institution like the DLT Science Foundation, which of course led by Paolo Tusca, UCL board member, Hedera governing council member, with other council members like LSE, IIT Madras, and universities across the globe. I'd love to see that kind of institution come out with a set standard for tracking a metric like this. Maybe pull in the other chains that are pursuing it. You've got the Avalanche CEO, you've got Emin, who's also a professor, the CEO Silvio of Algorand, also a professor. I think it would be great to get all of these people in one room to formulate this standard and then agree on how we're going to track that, and then go to someone like CoinGecko or DeFi Llama and really get that ball going there. And for us to be able to spearhead that metric as one of the leaders in that new narrative, I think would be massively valuable. So I'm sure conversations are happening on how we can track that. We know DLA Piper was speaking of TVR. Let's just hope the cogs are going there for that more public-facing metric.
Absolutely. Well said. All right, we're going to take one of our hard left turns. We're going to get into sports. We talked about sporting crypto just last week, and I caught up with their CEO, Pet, so listen in. Pet, can you tell us about sporting crypto and why you wanted to focus on the intersection of DLT and the sports industry?
Yeah, so I think this story probably starts with how I actually got into the world of crypto in itself. So I've always been a massive sports fan, mainly football fan, but I also trained karate when I was younger, as my dad's a karate instructor. And I started an internship at a consultancy, like a small challenger consultancy, 20-person. They had a podcast called Blockchain Insider, which I think the CEO of Hedera actually appeared on in either 2018 or 2019 when I was producing the show. So that was kind of my introduction into crypto and introduction into media, and I had the kind of sports passion. And yeah, I did a bunch of stuff at the company 11FS that I was at, including a bunch of video production, live stream production, kind of live podcast production as well. We did a bunch of live shows in Amsterdam, New York, Vegas, etc. And got the chance to work with huge brands, which was awesome. And, we were able to interview people like the founders of Hedera, but also Vitalik, Jameson Lopp, Vinny Lingham, a lot of people that were probably harder to get a hold of nowadays than in 2018. But we managed to, even the founders of EOS, stuff like that, which was, the crazy pinnacle of the last bull run. And so that was kind of my introduction into crypto. And I suppose my interest kind of grew stronger when crypto went further than the kind of speculative financial instrument to something that might not just disrupt finance, but disrupt everything.
Sure.
And I think that kind of chasm it crossed from, hey, this is going to disrupt like banking payments to, oh, actually, this is going to disrupt the way that like people interact with customers, how you engage with fans, how you move retail property, whatever it may be. There's so many use cases that people tout, gaming, fashion, etc. That's where stuff started to interest me a lot more. And I had a contract with a company called Copper 90 to be the head of Web3, who are like a big soccer media company. And at the same kind of time, I was like, oh, well, I think there might be something in this kind of sports intersection. If this crypto thing is going to disrupt culture as a whole, then there's going to have to be content about sport. There's going to have to be content about gaming and fashion and music, etc. And sport was what I was passionate about. And then I got the experience to kind of work in the sports industry with the agency that I mentioned, and got to connect and speak to a ton of amazing people. And the more conversations I had, I was like, oh, maybe I know more than the people I'm speaking to. And it wasn't more about crypto, more about sport. It was more about both of those things combined. And that's where I kind of started writing the newsletter on a whim, really. I think it was when So Rare raised their $50 million round. And I thought, this is going to be on the on the desk of every front office management person in sports business or in entertainment, etc. And went for it. And we kind of just snowballed from there in late 2021 and have grown ever since.
So speaking of catching some of that attention of those front offices, you have some impressive readership. Can you take us through some of the highlights, and what do you attribute the attention to?
I'm maybe underplaying myself or underselling myself here, but I think it is a bit of a supply and demand thing. There is very little coverage of this kind of intersection in a B2B way. There's a lot of like B2C coverage, and there's a lot of like, oh, look, this bad thing happened, from journalists and reporters, both of which are really important. I kind of started realizing as my subscription base grew, where I was like, oh, this person used to run digital for the Manchester City group. And I was like, that's quite an impressive person. Why they're reading my content? Or this person heads up this thing at the NBA. And I'm like, okay, again, like, why are these people reading this? And so it's not only those people like reading, it's like when I look through the engagement levels and how many emails they're opening, it's a lot of the big hitters are in the top 250 or the top 10%. And I was kind of like, okay, this trend isn't stopping. And actually, when we crashed in this last cycle, the kind of level of average reader in terms of brand, in terms of where they are in their company structure grew higher, which was very fascinating to me. And so I kind of doubled down when we got to about 300 to 400 subs on the more B2B front, because we were trying to do and I say we, it's practically me, just trying to be more professional here. But I kind of realized, like instead of kind of focusing on this random headline to do with crypto that might inspire these people, just focus on the kind of B2B headlines here and try and make these people in the front offices who are making decisions smarter. And so, try to bottle that bit of lightning and carry it through.
Yeah, makes perfect sense. So just last week, we heard about the partnership you have with the HBAR Foundation. Let's tie it back to Hedera here a little bit. What are some of the sports use cases within the Hedera ecosystem that have you impressed?
I mean, I'm going to be super biased here as a former karate person and someone who's an advisor to Karate Combat. I think what they're doing is crazy but amazing. I'm not a massive fan of tokenized sports projects, but the way they're going about this is really, really fascinating. And I think you need those moonshots at this point in the cycle that are going to like either go crazy ballistic or not be as successful. And I think knowing the team there and knowing the product and knowing how slick the app is and knowing how sticky the audience is, I think I've said for a while that it's going to be really hard for kind of mainstream incumbent sports organizations or leagues to pivot totally into some like crazy Web3 fan engagement model. But a Karate Combat who are 3 years old and in their trajectory where 15 years down the line, this is seen as like a major decision for why and how they grew and how they engage, I think is really awesome. And I think it's going to be looked at as a successful failure. I think it's going to be looked at as a big bet that a lot of people will learn from. But I do know the team and that they're really good. And I also love the kind of other side of it outside the crypto side of things is the kind of next gen immersive backgrounds. I think that's just awesome. Like, why haven't people been doing or thinking about this in sport for a longer time? And yeah, that would be the one that I'd mainly point out. I've also spoken and at my last event in New York had the folks from Galaxy over. Obviously have a big sporting time with Spencer Dinwiddie and stuff. And I met their executive. By the way, they're all massive. They're all like 6'5", 6'6". They stood out like sore thumbs in the in the event, which was hilarious. But their account executive said that they'd all onboarded like hundreds of creators, whether it be like sports athletes or music artists or YouTubers, vloggers, whatever it may be. And I met the account manager. I was like, "How are you juggling all of those things?" And so that's the other one that isn't directly sports related, but is going to encompass sports in some way that I know about and have kind of been keeping attention to and know the founders there. So those are the couple that jump to mind.
Yeah, Galaxy certainly has a huge sports presence. One of the things about Karate Combat that I've been talking about recently is, it didn't come out as a Web3 platform right off the bat, right? They had a good product first, and they're using Web3 to enhance it. And I think that's certainly a good way to go. So considering, the connections you're making, in your opinion, what does the future of crypto and sports look like?
So I think there's been a big focus on commercialization within organizations. Like, let's sell our IP to the highest bidder and, sell some NFTs. But I think a lot of sports orgs and leagues are realizing that can't be the product and that you need something more all encompassing and something that is going to be a lot more engaging. And for me, I see the next kind of decade, sports organizations, brands, sports media partners, whatever it may be, looking at this more from a engagement guise rather than a value extraction tool, or how they would just do like merchandising. And look, there is going to be room for that, right? Like, there's no reason why Panini digital stickers won't be a functioning and flourishing business in the future. And there's no reason why Nike can't sell digital sneakers for the next decade. But Nike won't be able to just sell digital sneakers and that will be it. Right, there's going to have to be some tie-in into the rest of their digital strategy. And so I think my take is that these big brands in sports, but more broadly as well, are going to be looking at the space from an investment perspective, like they did social media 10 years ago. There's no company you'd go to now and say, like, what would your social media rights be worth? And how much money are you expecting to generate from social media over the next 3 years? Because directly, it's going to be very little. Indirectly, it could be big through ticketing, merchandising, cross-selling. And I think the penny will drop, I think, soon. And I know a lot of the mandates internally at a lot of these big sports organizations have shifted from commercial to engagement. But the penny will drop soon, even around stuff like data and CRM stuff, where instead of having to be throttled by silos like Facebook, Twitter, Instagram and such, like if you have an on-chain network of people, that's really powerful. And in the same way that like I can shift and lift my newsletter list from Substack to Beehive to MailChimp if I get bored of one of them, you can't do that with a lot of other things that sports brands use to engage with their fans. And I think that lift and shift ability is going to be seen as gold dust in the future. Being able to, transport an on-chain network of people from one event to another, from one funnel to another, and do that in a more fluid and less inhibiting way than we've kind of seen Web2 grow to be.
I think you're on the mark there. Pet, is there anything else you'd like to pass on to the Hedera community?
Well, I'd love everyone to subscribe to the newsletter, so sportingcrypto.substack.com for you folks who haven't already subscribed, and then keep an eye out for the podcast that we're going to be starting over the next month, where we interview 15 leaders in sport about their kind of Web3 journeys. I'm interviewing Mark Epps, the director of comms and Web3 at the ATP Tour on Wednesday, and then Preeti Shetty, who's the director of Brentford Football Club later this month. And we've got a lot more big ones planned the rest of this year, so it should be fun.
Well, congratulations. Thank you so much, Pet, for swinging by and telling us about sporting crypto.
Thank you. Pleasure was all mine. Thank you, Brendan.
So, Zeb, as we mentioned last week, and as Pat just mentioned there, he has some impressive readership, so there should be some pretty good influence. Having Hedera at the top of his mind is certainly going to be good going into the future. The next thing we wanted to get into is Acubits. That was an announcement made by the HBAR Foundation this week. Do you have some more information for us?
Yeah, so despite looking at their social profile, you might think they're not that big, but they really are a sort of world-renowned blockchain and AI development team leader for this kind of infrastructure. And they work with different enterprises and different clients, mainly in the UAE. As part of their sort of infrastructure, they've now integrated Hedera NFTs so that enterprises can leverage NFT technology on Hedera, but also create things like marketplaces and whatever it might be. They're exposed to the Hedera token service and smart contract service. One of the big regions for Web3 at the moment is, of course, the UAE, particularly in Dubai. And so this is the next step of, Vignesh, who's the in charge of the Middle East business development. This is kind of the next step in his, vision that he's got for this side of the foundation. And, I'm excited to hear that there's a lot of different enterprises that we could potentially be working there through Acubits. I'm sure there's going to be more news coming up in the UAE. The UAE is definitely a focus of the foundation. So this is an exciting break along that way.
I do have a couple quotes. The CIO and head of blockchain at Acubits said, "We're thrilled to work with the HBAR Foundation. This collaboration is a testament to our commitment to enabling businesses to leverage the best and most suitable blockchain technology for their needs. With the integration of Hedera's protocol into our NFT marketplace solution, we're enhancing our offerings and contributing to a sustainable and eco-friendly blockchain ecosystem." And Vignesh, he's the director of business in the Middle East and South Asia for the HBAR Foundation. He said, "We're excited to partner with Acubits to bring Hedera's NFT infrastructure to a broad range of clients, particularly in the Middle East. With major brands and organizations in the region testing the waters of tokenization, it's clear they must do so with sustainable practices. Hedera's carbon negative status enables organizations to benefit from the innovations of tokenization without the heavy carbon footprint associated with other networks."
Yeah, so it's great to see another development team like Acubits supporting Hedera. Side by side that, we've actually got some really exciting news coming out of the TribeX accelerator. As I understand, having spoke to Nico there, who's the BD point of contact, they've had more developers sign up for this particular event, i.e. the Learn and Earn program on Hedera, than they have in their history. So this is great to see that many people excited to learn about Hedera. And I'm sure that's particularly because of things like the languages such as Java, which is accessible it's the biggest developer pool in the world. So exciting to see that kind of being leveraged there. And, we'll definitely be hearing more on the developer front.
Yeah, for sure. And another strong team we have, of course, is Hsuite. They already have a NFT DEX, and they're starting to roll out their regular token DEX. And Hsuite is interesting because unlike other DEXs, they don't use smart contracts. They use something called smart nodes. It goes back to what Lehman used to talk about with using app nets. It's really what Lehman had as his initial vision. And on their website, it says, Hsuite is the world's first carbon-negative DAO to utilize innovative smart node technology deployed on top of the Hedera network. With the ability to bypass smart contract limitations and risks, our smart nodes enable infinite scalability. And Zeb, what they're saying there is we have smart contracts 2.0, but it's limited to about 200 to 300 transactions per second. The way they're developing this can run at the limits of Hedera, which of course is throttled down to 10,000 transactions per second now. And with sharding, it can infinitely scale. So they're saying they can go along with that infinite scalability as well. And they also have significantly lower fees. So smart contract calls, of course, the fee associated with that is 5 cents. This is significantly lower. So from some of the tests we did, the fees associated with a swap are 0.035 HBAR compared to a smart contract call, again, which is 5 cents. So now they are starting to roll out their DEX. This first month, which started on June 1st, they are supplying all the liquidity and only their NFT holders can participate. In the second month, the platform will be open to public swaps, so anybody will be able to swap, but they're still going to be the ones providing the liquidity. In the third month, so now we're talking about August, their NFT holders are going to be allowed to supply liquidity. And then moving out to September, anybody's going to be able to swap and anybody's going to be able to provide liquidity. So it'll be completely open at that point. Zeb, this is just a really innovative team. This is a really innovative concept, and I'm really excited to see what they come out with. And with that, we'll get into some network analysis. Over the past 24 hours, we've had 76 million transactions with a max TPS of 6,000. But over the past week, we've had over 500 million transactions and a max TPS of over 10,000 transactions per second, 10,590 to be exact. So Zep, I'm not exactly sure how this happened, but it looks like we went through the throttle. That's pretty impressive, huh?
So, that throttle's been there as this sort of sacred figure for, a long time now. And for us to have sort of blasted through that already is pretty damn impressive, in my opinion.
No question about that. And moving down to our time to consensus, we averaged under 5 seconds over the past week, but it has creeped up a little bit over the past day. Over the past week, we've created over 10,000 accounts, and over 26,000 of those are active accounts. Moving down to our fungible tokens, we have Energy Trade Token still at the top. We have Wrapped HBAR, Sauce, HeliSwap, XSauce, and USDC all in the top 10, showing we have a healthy DeFi ecosystem. And we also have Karate, which edged into the top 10. All right, and moving down to our NFTs, I see Helping Hands into the hash graph, and I'm not exactly sure what that is, but maybe you'll have some more information. We also have Dead Pixels, we have Earthlings, we have one of our naming service, we have Hangry Barboons, and of course the cosmetics company ElfU, all in the top 10. Do you have anything else you'd like to pass on as far as NFTs, Zep?
Yeah, so up there we have Helping Hands, which is set up, I believe, by Dylan Faircloth and his wife, who also set up Personal Access, which is another application on Hedera. But it's basically a group of community members from the Hedera network that are in the Discord helping onboard new people, setting up a wallet, get NFTs, explore the DeFi ecosystem, this kind of stuff. So they're doing a great job there. And I believe their Twitter handle is onboard NFTs. So yeah, good Twitter handle. That's what they're doing over there.
That's the kind of stuff we see come out of our community all the time. They're very welcoming, and I just like to see this kind of initiative. All right, with that, let's go ahead and get into some DeFi. Starting with DeFi Llama, not including stated liquid staking, total value locked on the Hedera network is at about $23.5 million, off about $1.5 million on the week. Over the past week, Saucer Swap's TVL has dropped about 7% to $15.6 million. Pangolin is off about 10% to $5.5 million, and HeliSwap is down 4% on the week to $2.26 million. But you'll notice it's up 6% on the month from the bump we discussed last week. Apparently, they boosted some of the returns, which allowed them to take some market share. As discussed in the past, I'm going to focus on the top 2 platforms based off of TVL unless there's a special circumstance. Looking at returns on some of Saucer Swap's popular trading pairs, HBAR X is at 12%, 26% on HBAR Sauce, 24% on HBAR USDC, and 42% on HBAR Karate. Over on Pangolin, the average on HBAR USDC is 68%, but you'll see after 3 weeks, I'm still below 12%. The average is 348% on HBAR PBAR, but I'm just under 50% again after that 3 weeks. And the average APR on HBAR X is 18%. Moving over to the crypto and HBAR markets, risk assets like stocks have been performing well. Not financial advice, but I'm wary of this move, and I'm positioning myself to take advantage of a possible dip this fall. Relatively, mostly due to the SEC actions, crypto has underperformed. Bitcoin less so because it's already been deemed a non-security by the SEC, but the alts were hit hard. Since HBAR wasn't specifically named, it held up pretty well, only being off 5% on the week to 4.8 cents. Unfortunately, we did break below that key level of support at 5 cents, which is now likely resistance. If we continue to dip, the next area of support is down around 4.4 to 4.5 cents. All right, Zep, that's pretty much all we have. Is there anything else you'd like to pass on?
Yeah, so I mean, again, great to have Rob back and great to hear his insights on the Hashgraph Association side of things. I'm very excited to learn more about the HEP, i.e. the Hashgraph Enterprise Program. 50 new enterprises is nothing to scoff at. That's a huge amount of potential value coming through the network. And then you compound that with the other news, such as Abrdn, which is one of our newest council members, in the last 3, who are delivering on their promise, delivering on the promise of new council members, which is to come in with a use case and deliver. And we're seeing the first instances of that. We know that Arcax is saying they're looking at other things to tokenize, other value to tokenize on Hedera in the real world. So it really seems like the enterprise side of things is starting to pick up. So again, very exciting news there, and I'm looking forward to learn more next week.
Yeah, Zep, it's exciting for sure. I want to tap Rob next week on total value represented because I really do think that's going to be an important metric. We also have an update in our Twitter space next week for the HBAR Foundation on our FinTech fund. So I'm looking forward to that. That's pretty much all we have. We'll see you next week.